It's January 14th, 2026. It's Wall Street Beats, powered by Passes. We're on the broadcast today with Ben Bry, Jeff Mackey, Nadine Turman here. We've got middle of the week. We're full in on earnings season here for financials. And I know, Ben, you're worried. You're very, very worried. So maybe talk a little
No,
bit
no,
about
I
what
think
data
worried.
that you're looking at.
No, I don't think worried is right. I just think if you think about November 20th, we had shorted a bunch of stocks and did pretty well in that fall period. And then it bottomed out November 20th. And it's been one hell of a run. I mean, I
Silver,
remember
baby.
calling you and saying, hey, let's hedge some of our bonds with buying the consumer tariff basket. And Jeff can attest in mid-November, tariffs, I mean, consumer names were just left for dead. And a lot of them, Abercrombie's up 100% since then, despite the 20% down move this week. Um, and so I just haven't seen anything that seemed, remotely bearish. And so yesterday, I started to see a little bit of signs. And, Jen, you can put up this chart. Um, Volatility is completely on its butt. And one big component of that is the implied correlation. And so everyone who's a stock picker sees it, right? Like there's just huge dispersion across the market. And the markets, the S&P really hasn't done much this year. It's nothing like silver or some of the consumer names or emerging markets or, the IWM at one point was up 6 or 7%. So we had a 30% pickup in that the last 2 days. And now the market's down 80 bips today. So whatever. It's not that big a deal. But I think the S&P was only up 2% year to date, and it just lost half the year to date performance in the last day. So just something to keep an eye on. I'm not trying to say I'm super worried, Nadine. Just more that I haven't seen anything really that was bearish or letting and like the dollar's rising, oil is actually going up, and it's kind of that combination of oil volatility and in the dollar are the three things that have kind of kept this thing really together for the extent of this bull market since last, well, whatever, Liberation Day. So the other thing I was talking about, and speaking of oil, Jen, you can pull this up too, is Schlumberger. We were chatting about it before the show and laughing. It's breaking out, buy the invasion stock. It's kind of funny, but it is actually one of those things that's just
Would you
stupid.
buy in now, Ben? Like, is it too late? Is
Well,
the
so
news
so
on
the
Venezuela?
That's a good question. That's a good question. I think it's like this. You need to start seeing when we got this headline this morning that Chevron is talking about bringing them in to actually do work. So I think the first move here was the anticipation re-rating. So the multiple went up. So it's at 14 times earnings, 14 and a half, starting to get a little lofty, and still an oil
Yeah,
services company, right?
yeah.
I mean, but remember this, oil services has been in the doghouse for 13 years or something like that, 12 years. I mean, pull up the long-term chart of the OIH or something, and you can see that these stocks have been hated. So if they're going to actually get brought in to rebuild the oil infrastructure in the country that allegedly has the most oil in the world, and then who knows, maybe Iran will come on board too. I'm sure those boys need some oil infrastructure revamping. You could see a multi-year run like we did in the 2000s. And just to be fair, like there's more and more stuff I'm seeing in the markets that look like the 2000s. Emerging markets is working well. Gold, I mean, silver, gold. There's a lot of stuff that reminds me of that market 20 years ago, post the .com, and so oil services being one of them. It wouldn't surprise me, basically.
Okay. So at what point would you go into Schlumberger, or are you saying it still could be interesting? Like, what do you do here?
Well, I'm just staying long. I'm not doing anything, but I think it's one of those things where you probably can own some and then start either selling puts, or you can, for people who don't know, don't do that. You just own some and then you start watching it, and as the news starts to come through, But it's the thing where when we get a new trend, we always want to be like, oh, I wanted a bottom ticket or whatever, but it's a clear breakout, and it's one of those things where many years of earnings growth, and and just think about how the market works. like just the mechanics and the passive, there's a lot of portfolio
Yeah.
managers who do not own this. So,
Yeah.
you can have a
So you're saying
multi-year run.
you could edge in here.
Yeah, I think so. But I mean, look, again, it did just have a 25% move. So,
Yeah.
it doesn't mean you can't
Maybe
get
wait a
like a
little
little
bit.
pullback. Yeah.
Okay. Anything else of note? I mean, you see silver?
Yeah, so I have a chart on silver too, that I just put together when I
Good.
woke up out here in California. Jen, you can put it up. It just as Pan American Silver is a miner. It's not following silver. Silver's up 5% again today.
Yeah.
I really
I
don't
just
know.
sold it. I had silver and I just sold it. I was like, I'm
I mean, it's
tapping
been
out.
unbelievable. It's been
Yeah.
unbelievable. Jen, do we still have
Tapping
that
out.
chart or do we not have that chart? Well, whatever.
She might be off.
No.
But
Yeah, no
anyways,
worries.
yeah, silver's been a
But this,
monster.
but the one thing I would say is that the beginning of the move, the miners, the producers stuck right with it. And right now they're starting to not move. And you see that in commodities sometimes where you'll have the spot continue to rip. You see it in oil, you see it in other industrial metals, and the equities don't continue. And often the equities are the ones because they're selling forward. They're anticipating not just what the silver price is over the next month or something, they're over the next couple of years. So it's worth watching that. And I would say last night I ran this relative value model I have, and energy, so if you compare industrial metals to energy, you compare precious metals to energy, using the BCOM indexes, you compare oil, just silver or gold to oil, it's basically 99 percentile, 0 percentile stuff. So, I think if I'm going to buy commodities, I think oil is the more interesting thing to buy here than chasing, I don't know. For a long time, I was very adamant the gold, and we did some silver, but this is now, I don't know.
It's
It's
crazy.
very difficult to explain what's going on in silver right now.
Yeah. Yeah. All right.
And it's not our
Mackie?
first rodeo
Okay.
on these things either. If you're more than like 20 years old, or you've been around for a while, Ben, now that you're in your mid 40s, and happy birthday. But I mean, it's this happens. And dogs that chase cars and people that chase silver and gold
Yeah.
rallies in the late stages, they end up
Yeah.
every 10, 15
Get in
years. You see
trouble.
one of
Yeah,
these
like
things, and the same people crop up. You got Peter Schiff talking shit. You got that Sprott guy who owns every goddamn, silver miner in the whole history of the world. He projects out to be the richest man on earth, and then it ends in tears. And this is not the first time we've seen it. It's a two-part trade. To my point, and it kind of segues nicely, Nadine. And I know you're kind of got your silly pants on today, and you're a busy woman, so I'll segue for you. But you're seeing the same kind of thing in a lot of the consumer world where I play. It combines those two. An American Eagle rally. If you look at like a 20-year chart of American Eagle,
right.
it's not its first time going from 10 to 30 in a big hurry, and it's not a $500 stock. So what's that tell you about the chances that they're going to tack on a few more quarters?
Right.
I'm not saying that they fall apart right now. They reported really not blowout numbers, great numbers. It seems like the end of, and they were down yesterday. Abercrombie got 20 points taken out of it. The names actually acted really well. I think it's a chance to kind of take names that have gone up 60% since November, just because that's not a particularly natural move, and you're getting into some high multiple territory. I still like names, that I'm not touching, even though I'm tempted to and have some gains in. Target acts really, really well. Lululemon came out, they pre-announced, that has all my favorite ambiguous kind of catalyst out in the future, right? They're looking for a new CEO, they've got activists, they've got turnaround, there's some low-hanging fruit. Both those names, you don't need a lot to happen, and they're trading at much lower multiples, whereas, it's just late in the game in typically what you've seen.
Yeah.
I love mall stocks. American Eagle, Gap has worked really well. A lot of them have worked tremendously well, but it's
I
just
rarely
late
hear that.
stages.
I love mall stocks.
It's a new era.
You haven't hung out with me since November, man. That was you could have taken 10 months off last year, and like middle of November just said, you know what? I believe in Christmas. And holy shit, was that the trade of the year? You had a 30% year, you could have just gone home and taken 10 months off. I hope to make that trade obviously every single year, and it's going to be right like 90% of the time, because people always love to just shit on how the holidays are going to be terrible. Fade that always, but we've had our run, and it's not going to be huge. ICR was fine. it was okay, but I like names, like Cracker Barrel. I think that entire controversy was largely crap. It doesn't leave you with a good company. It just leaves you with a stock that's down 75% based on we got rid of Uncle Remus and that ticked off a bunch of rednecks. I mean, there's a lot of reasons to hate that company, but they're not going out of business anytime soon. It's still going to be like a chain smoking gravy and biscuit joint. They're fine. In the long run, they're all Denny's, but at the end of the day, stocks like that are beaten way down, and it's a more interesting place to go fishing in January before we get ahead of sort of all these retailers are going to report Q4, and then it's going to be a forgotten space for the next 6 months. If we get kind of another Liberation Day sell-off, that'd be great. If we get a Supreme Court ruling and he dumps on the tariffs, that's obviously going to be bullish, and that would be one hell of a graceful exit. Declare victory, hold the parade and sell some of these names and just take a little time off right now. That's where we are in just kind of the consumer and the annual cycle.
Right. All right. And
I mean, it has been a great run though for these consumer stocks. They were
fantastic. It just hammered, right? Just absolutely brutalized. And I don't know why people still listen to the optimism surveys. I think that they confuse how people feel. Like you don't have to be a super cynical, dark person to feel sort of bad about the shit that's going on in America right now, in the macro at least. But that doesn't mean that you don't buy your kid Christmas gifts. You got to learn to separate those two emotionally. I don't know how they're collecting data at Michigan, but if you're serving over the last decade and it's just kind of hanging out at 50 now, there's something wrong about the way you're collecting your data. Not to shit on a Big Ten school, but it seems like Indiana is now maybe the place I want to go for my statistics and my football enjoyment.
Way to sneak that
nice
in
tie
there,
in there. Nice tie in for the pre-show chat. But so how do we weigh this? You've got the bank earnings, which has been mixed. You've had some good ones, some bad ones. What are you looking for, each of you, in earnings season? Is there anything in particular that you're gearing up for?
I still look. Earnings have been particularly real since the financial crisis. I think they could all report the letter Q, and we would all just be like, that's fine. Whatever. So I'm just looking for, I mean, they're cooked and they report whatever they want. It's an open book test for them quarter after quarter.
Yeah.
So, I am encouraged by what they say about consumer spending. Yet again, for all these terrible things that are about to happen to the consumer, they just keep charging stuff. Yeah. And so you really just have to assume that everyone's an idiot except you. People are living way beyond their means. When people start saying stuff like that, I just want to buy whatever they're selling because, everyone's stupid except me is a fairly silly life view. And so, consumers are spending. I assume they can pay their credit card bills. I assume that's fine. I don't think the SCOTUS matters that much. That ruling's supposed to be today. If you get a pop on the stocks, it might be a graceful exit.
Saw headline pushed off today.
Yeah,
pushed off.
Probably wants to negotiate.
They kind of just don't want to.
They don't want to rule. They don't want to give the bad news to him.
Well, maybe
they don't want to get sued.
They're going to rule with them
in court themselves. Yeah. They don't want to lose their jobs.
There's
They're like, we could wake up tomorrow with like 30 Supreme Court justices.
Well, he's probably going to have some new rule that that there's a term limit. We're going to hear about term limits.
Yeah,
he's going to stuff the court. He'll just pull an FDR.
He's doing a lot of Mad King shit. It would not surprise me if he somehow gets to these guys and gets this thing like, you're not overturning it. Like, you know what I mean? Like, that's not how America's supposed to work, but it would not surprise me at all. And the market definitely, especially these consumer names, are not priced for that at all.
No, and he'll for sure come up with a brand new way to charge the tariffs. I mean,
right. Yeah, that's what they're thinking. That's why
they've already told us they're going to do that. And when he tells you they're going to do something crazy, he does something crazy. Like he's not a big bluffer. He's not. If he just kind of says the crazy crap that he's going to do, and then he does it. I would like a whole new East Wing, and I'm going to make one. So I tore the old one to the ground, and now we'll work on building permits. That's who he is.
But yeah, I'm with Jeff. I don't think earnings really matter. I think most of what's going on is financial. You look, the S&P divided by gold is at the COVID lows right now. I mean, things have been devalued in, where they call the debasement trade. But like, truth is that like the S&P is not discounting actual earnings. It's discounting debasement and fiat and people needing to own something in anticipation of the government just putting the hose back on. I think that's actually what's going on. And then some of these countries like getting money. I mean, it's a weird time. I think that with the market we grew up with, now that I'm properly in my mid 40s and old like you two, that it's a little different market than we grew up with, where earnings was really truly the driver.
Well, the only caveat I would say is I think people do care about tech. We'll be seeing tech in a little bit here, and the growth of capex, where people are spending, and hearing about, in my view, if they're spending on tech, where are they cutting? Are they cutting on dividends? Are they cutting on share purchases? People don't like that. You saw the JP Morgan yesterday. People don't like the fact that companies don't have unlimited cash flow, but they do. And so they have to make decisions. And then if you're making decisions, what's the ROI, right? It's a lot easier to understand a buyback, a lot harder to understand massive spend on tech, especially if you're saying that the benefits, you won't be able to talk about for a while from now. So I think that's going to be a major theme of earnings season. I don't think that you're going to get a lot of hard data on it, but I think that there'll be a lot of pressure on it. So I think, and I think vol will continue to go up. So I don't know, long vol.
I mean, a related point though, it's from the ICR. One of the bigger presentations that I saw was from Walmart, and it just told me that this is just a huge year, because they're really deploying the AI. They're really using that. They're
Yes.
actually going to change sort of the way that you buy from discount stores. That's the one
Yeah.
online retail experience that hasn't been souped up at all. If you go to apps for any specialty store, there you have moving models. You've got really nice,
Yeah.
clean depictions of the merchandise. The discount purchasing process is still just garbage. And the Walmart exec, he's clearly got it. He said, listen,
Yeah.
it's going to be a world of less scrolling, less just you ask for a light bulb, you get 250,000 suggestions. We're going to
Right.
eliminate that, and we're going to know our customers better, and we're going to make that more efficient. Now you can buy distribution centers and where you just got a bunch of bots fulfilling orders, and all of a sudden your margins go up
Way
on
up. Yeah.
half, $750 billion of product.
Yeah.
That it goes a long way to explaining why Walmart has a higher multiple, because and it's also a huge investment thesis check for a lot of what these companies are spending on. Amazon, not
Right.
least of them. They're spending a ton of money, and that stock will trade on whether or not AWS grew above or below 20%. But the
Right.
bigger play is, oh yeah, we also have a $400 billion retail business that is really about to explode because we're going to use what we actually are selling. So, huge kind of thesis year for tech. I like it from the second derivative place, though. I'd like it more for the retailers, more for like the glass frame companies, the
People
people that are
using it,
actually
right?
putting this
People
to
using
work.
it.
Yeah.
Yeah. Yeah.
Yeah.
Yeah. Yeah. All right. Well, on that happy note, again, it is January 14th, 2026. Ben Bry, Jeff Mackey, Nadine Turman here on Wall Street Beats, powered by Passes. So good to see everybody, and we'll catch you back tomorrow. Thank you.